scalp, and we're gonna do a few examples. This is just for today. There's another things that I want to do in a class, which are chart patterns, supply and demand, and Fibonacci's. But that's going to be an. So for today, we're going to start from the very, which is good. We're starting a new year, and Kian already went to. Today, we're going to start with the basics, the most basics of chart. In the next charting class, how to recognize patterns and things like supply and demand. And this way, you guys can have like a foundation. By the way, you are not going to become an expert just 1 hour class. There might be also other approaches that work better for you. I'm just going to teach you what I first did, what I first found helpful. This is not the first thing I did, but when I first started doing these things, I could build like a plan on how to. He said he can hear. Also, guys, try to speak in main chat. And there's the main chat where we always talk. So try to use the main chat, not the one. But again, today it's going to be it's the foundation. There's more. There's a lot more. But is it coding for you guys? Okay, if it. Okay. Let me join on my phone. All right, how about now? Is it coding still? Is it better? Okay. Well, if it codes again, all right. Well, you guys have to let me know, okay? It might be a microphone. I might need to actually get a new microphone then. All right. Well, just keep me. Sorry about that, and just keep me posted. If it gets bad, we might have to do it again. Like next week, I have to get a new microphone, and we'll do it again. But just keep me posted on that. Okay. Well, let's start then. So we're gonna start with support and resistance. This is the very first thing I learned in charts. Basically, these are straight lines, horizontal lines that you can find across your charts, and they're gonna tell you where. I think that you guys can hear. That's more on you, because I know people can hear me, right? Like some of you can. Okay, cool. So support is basically the floor of the price. and resistance is the roof of the price. When we say I find a resistance at this level, that means that you're expecting the price to top at this level. When you say I see a support at this level, you're expecting the price to stop dropping at that level. However, there's obviously breakouts. So just because there's resistance at this level doesn't mean that the price is never gonna go up. Like we saw it today. We had resistance at 40.55 on ES and it broke. So something important to keep in mind is the previous resistance can become new support and previous support can become new resistance. So now let's look at the charts and let's see what's a resistance. Right now, I'm only doing it with a SPY. So we're gonna do it with a SPY in the 1 year chart. We're gonna go through time frames and that in a little further in this class, but I'm gonna start with this very basic. So for example, a resistance would be where you see the price topping, right? So the highest, people are, okay. So the biggest resistance that you will see here is the all-time high, 462.07. So that's a resistance that you can see here. You can draw a line in here. I'm gonna show you how to do this. So on Thinkorswim, and there's other trading tools that are different, TradingView, E-Trade, Webull, they all work a little different, but the concept should always be the same. So on Thinkorswim, the easiest way to do it is under drawings, drawing tools, and this one here, second to the right, says price level. So this will be your resistance here, 462.07. So you can always draw it a little closer. Okay, what happens with this level though? SPY right now is at 404.75. So we know this level is not going to work for tomorrow, right? So we're gonna have to find something closer. So we can do a little zoom in the chart. And we can see here, for example, from this is December, we saw a resistance at 409.07, 409.7. So it's a very close level. We also saw support here at 391.28. So you see it here again, and yes, it broke a little bit here, but it stayed close enough. And again, I'm gonna show you how to do it on different time frames. So now moving on. Now you have exponential moving average. So these ones, you can also use them as support as resistance. And there's also what we know about EMA crossovers. The problem with these ones is that they work better in longer time frames because there's more data accumulate. So an exponential moving average is basically, if some of you guys took statistics, it's a smoothing the price through previous data. It has a formula. That's why the 200 EMA takes different data than the 50 EMA because it's based on 200 and the 50 is based on 50 days. Also, your time frame is going to affect the level of those EMAs because the 5-day chart is also, I think it divides on it has a formula. I don't know if I put it here. No, I did not put the formula of the EMA. It does have a formula, and whatever time frame you're looking at, it affects the price. Why, if you look at the 200 EMA, in the 5-day, hold on, somebody mute themselves. Got it. So that's why if you look at the 200 moving average, let's look at SPY for example. This red line here, that's the 200 moving average on the 1 year and 1 day chart. It's at 398. If I look at the 5-day and 15 minutes, it's at 444. Because you are inputting the formula, you're changing the values from the 1 year chart to the 5-day chart now on this specific 200 moving average. So the EMAs are used to determine the price, the trend direction, because it's smoothing the data. They can be used as support and resistance. Don't use to call them tops or bottoms. It only helps to have a general idea of the trend. You can use simple EMAs instead of simple moving average because there's more data in the EMA. The formula that is used for the EMA has more data than the formula that is used for the SMA. That's the biggest difference. And that's why the EMAs are more price sensitive, if you want to call it like that. We usually use the 8, 21, 50, and 200 EMA. Now for swings and scalps, we use different time frames. We're going to talk about the time frames that we are using in our charts. Usually for scalps, people use the 1 day, 1 minute, 5 day, 5 minutes, and 5 day, 15 minutes. I personally like the 5 day and 5 minutes, as well as the 5 days and 15 minutes. However, I do use the 1 day, 1 minute only at the same time that I'm entering that position. Why? Let's say I want to get in calls, right? And the 15-minute candles still look good, but I see a price dropping a little bit. In the 1 minute, it's going to show me if it's starting any signs of reversal. So if I see any signs of reversal against me in the 1 minute, I think about it twice. That's the only reason why I use the 1 minute. I don't use it to do support or resistance or to look at the price action. I only use it right at the same time of my entry. As a matter of fact, this is how I look at my charts. This is pretty much what I look all day long. I have DXY on the 15 minute on the top left. Then I have VIX on the 5 minutes. I have tick. Tick doesn't matter what time frame you use. I have ES at the 15 minute. I have SPY at the 5 minute. And I have either QQQ or SPY at the 1 minute. So I'm looking at all these time frames at the same time. And again, this is personal preference. However, there are some charts that are more effective than other ones on when it comes to the time frames. What do you look when you open a swing? Well, first, what's a swing? A swing trade is a trade that you hold more than a day. So you hold a swing overnight. Basically, swings, you want to use the 180 days and 4 hours and the 1 year and 1 day. I personally like the 20 day and 1 hour too. What you need to look is major indices, bullish or bearish. You know, sometimes, like a few months ago when the market was dropping hard, it was a lot easier to swing puts. Or in like 2020 when the market was going up a lot, it was a lot easier to swing calls. Right now it is going up, but there's a lot of speculation ahead. There's a lot of diversity when it comes to opinions, whether the market is bottom or not. So it's a lot harder to make swings like this. But you need to know when is the where the index are. Like, you need to know that, because if doesn't matter if a company is going broke or they miss earnings or they're just a bad company or the chart doesn't look as good. If the market goes up big and you're swinging puts, you can still lose, and vice versa. Now scalps. What are scalps? So scalps are quick trades. They're usually with minutes or even seconds. Time frames to use: 1 day, 1 minute, 5 day, 5 minutes, and I also use the 5 day and 15 minutes. I get closest expirations in scalps, usually 1 DTE, maybe the same week expiration. So for example, QQQ today, that was a scalp. I like to get in the money contracts or maybe 1 or 2 other money contracts. And why? Because usually scalps, you don't have time on you, okay? So you want this to go your way as soon as possible. So closest expiration contracts and in the money contracts usually have the higher returns if it goes your way. However, if it goes against you, the closest expiration is going to have a higher decay. So if it goes out the money, it's very hard for that contract to recover. What are the advantages is that you get higher returns with no overnight exposures in the quick positions. The risks are a lot more volatility. You don't have time on your favor. It requires more accuracy when entering or exiting. So usually you look for 15-30% profits and you leave runners. That's at least what I do. And maybe risk 20-30% max, but this is also going to depend on how big is your position. Like 20% of a contract costs you $50 is not the same than 20% and a contract costs you $300. So keep this in mind. Sorry. So now we're gonna do pivot points. So for pivot points, there's a formula, and that formula is also going to give you a support and a resistance, which I don't use. I just use the pivot as the middle point. So what is a pivot point? The pivot point is a technical indicator that calculates the average between the highest, lowest, and closest price. So if the ticker is trading above the middle pivot point, it's considered bullish. If it's trading below the pivot point, it's considered bearish. The pivot point is the basis of the indicator, and then with the pivot point, you can also calculate support and resistance. I only like to calculate the pivot. I don't like to do resistance and support. I can do it on my own, and we're gonna do examples on support and resistance as well. As soon as I'm done with the presentation, we're gonna do all this. Pivot for day traders, you can use intraday charts. So basically, what you want to do when you're drawing a pivot on the chart, you look at the high of the day, low of the day, and the close. That's the formula. And for swing traders, you're gonna look at weekly charts. So you're gonna see a 5-day chart. You look at the high of those 5 days, the low of those 5 days, and the current close. So for example, pivot points. There's a formula that I made, and I can share it with you guys if you want. Let me open Excel. So sometimes when I share my watches and I'm looking at SPX, you see that I post something, or SPX, no, ES or SPY. You see that I look at something called pivot, and that's where I get this number. Let's see. This is opening right now. I can put this document in the chat, and you guys can use it. Yeah, there's a lot of pivot indicators too. So if you don't want to do the formula on your own, you can just draw it. You can just get an indicator. So for example, SPY, let's do a pivot for tomorrow. So for tomorrow, we're gonna use the levels from today. So for that, we just need today levels. So we're just gonna look at 1 day level. So we see a high at 404.92. So we high 404.92. We see a low here. Today's Thursday. Low at 403. Wow, SPY actually held right at 400. And it closed at 404.75. So now we have a pivot at 403.23. You can draw this on Thinkorswim using the same tool that you do for support and resistance. So you can actually draw these lines anywhere. And if you right click and you go edit properties, you can change the price. So we say the price of the pivot was 403.23. And you can change it here. So you can change your style of the line. You can have it extended all the way to the left or all the way to the right. You can add the name, and you can name it as pivot point, or you can just say pivot. You can change the color as well. So this is going to be your pivot here. So if you're trading tomorrow, you can use this pivot as support and resistance as well. As you see today, it was resistance for a bit in the morning, and then it was support a little further. So right now, obviously, it's trading above the pivot. So overall, it looks like it's in a not bull market, but it's strong. You can say like that. If it's trading above the pivot, it's considered to be strong. If it's trading below the pivot, it's considered to be weak. Okay, so that's our pivot. Now we're going to look at the standard deviation channel. So you guys probably heard about ATR. There's also ATR studies. It's very similar than the ATR. I just use the standard deviation. I only use it in my chart because it's hard to have a lot of studies in the smaller chart. But it's basically a technical study that consists of 3 lines. The middle line is called the linear regression trend line, and it's calculated using the least square rules. So that's just another smoothing. So it's similar on the EMAs and the ATRs because that's all these tools, the average true range, the ATR, the exponential moving average, the standard deviation channels. They are all have different formulas, but the idea is the same. They take price data from previous days, depending on how long you look at them and which one you use it, and they try to smooth the trend and give you a range, give you a price level where you can use them as reference. So the other lines are the standard deviations. Your middle line is going to be the regression, and the other ones are the standard deviations. So when something is trading, as you can see here, there's something that is called an empirical rule. And imagine this middle one here is the regression line. So basically, it's going to tell you that 95% of the times you should be trading within 2 standard deviations up or down. What does that mean? So for example here, this is my standard deviation channel. So it's going to tell me that, as you see here, I have 5 lines in total. The middle line, this one right here, this is the regression line. Then I have 1 standard deviation up and 2 standard deviations up. I have 1 standard deviation down and 2 standard deviations down. So basically it's going to tell me that 68% of the times the price is going to trade within these 3 lines here, within the regression line and the 1 standard deviation up and 1 deviation down. And if you see it works a lot of the times. It says that 95% of the times you're going to be trading within these 2 standard deviations up and 2 standard deviations down. So if you see something breaking the standard, that's 2 standard deviations, you're most likely good to reverse the trend. Like for example, this morning, you see we hit 1 standard deviation low. This is when we exit our puts, and eventually came all the way back up. Then the regression line was working as resistance, and eventually broke it and stay above it. This regression line works as support and resistance as well. And okay, now let's try to do support and resistance. Let's try to draw a few so we can practice, okay? And then I'm gonna do this, and I'm gonna open for questions. So here's the problem. I personally like to do it with the 1 year chart and the 1 hour and 20 days chart. But sometimes you have to adjust because it also depends on the price of the stock. So for example, SPY has been, you can tell it actually broke a range today. So if we go, by the way, these are all the time frames on Thinkorswim. So you can always do on the time frames here, you can do a customized list, and you can add your time frames here. So if you need to know how to do that, you can always add a time frame here. You can always delete one as well. So these are all the ones that I have. I can send you a screenshot so you can do them too. Some of them I don't use. Before we continue to, I'm gonna send you, so if I go to studies and edit studies, this is how you add them. These are all my moving average, my 8, 21, 250. This is the standard deviations. You'll notice that I have a 2 here and a 1 here. So it says close, comma 1, close, comma 2. So the 2 is for the 2 standard deviation, is for 1 standard deviation. This script, I don't even know what that is, but I'm gonna leave it here for now. I don't know. I also have this volume. Volume is very important. We'll go over volume right now. Although when you trade SPY and QQQ, they usually have higher volume than usual, but something that you have to look is when the volume is very low, you have to make sure what are you playing. So there are 3 things that you can play when you're trading, right? There's a reversal. So for example, so you see here, SPY has support at this level. It's a 200 EMA and it's support right here at 399.96. So if you see the candlesticks are forming a reversal, you can play a reversal, right? And you play the opposite. You basically go against it. That's one thing. Another thing that you can do is play the trend. So if the market's going up, you want to get when there's a trend line bounce. So for example, here you saw it bouncing off the 50 MA, then you get back in. You wait for a little drop when the market's going up, and you get back into the longs or calls. And it's vice versa with puts and or shorts. So you're playing with a trend. You're just trying to time your entry. And you can play a breakout. Breakouts are very hard to play, especially when the volume is low, because it's what we call chase. So for breakouts, ideally you want to put a lot of time. You want to swing those, because sometimes when you buy a short expiration, you ended up chasing, the price retraces a bit, and even though it's not as much, your contract on options are very volatile, especially if they expire soon, you're losing a lot. So if you're playing a breakout, like for example, beautiful breakout here, CBX, Chevron. And this is a chart pattern, so we're gonna go on this today. Today, no, in next class. So this is a breakout. However, look how it went down the other day. It had to retest. That's why I'm saying, like, if you're playing a breakout, you have to put time because eventually it worked and it came back up. So right now, you could say Chevron is breaking 186.66 resistance, which is resistance from November. In this one, that's why you have to be careful when you play breakouts because there's a lot of false breakouts and you can get trapped. I would say for me personally, breakouts are one of the hardest plays to do because you get trapped so easy. Like for example here, it broke resistance and then it closed below resistance. And then the next day, it opened above and it closed above. However, it went back down. So yeah, it broke resistance, but didn't mean that it kept going up. But if you play a reversal, if you play against it, you could have also gotten in. So right now, Chevron is watch. We gotta watch if it's gonna open tomorrow above this resistance and close tomorrow above this resistance using the 1-day candle. So that's gonna be your confirmation that it's finally trading above resistance. It finally broke that resistance. Can it go back down? Absolutely. So what do you do there? You use your old resistance as a new support. So if we're trading above 186.6 on Chevron, you're gonna look that as a new support if the price comes back down. So every time you're gonna enter a trade, ask yourself, am I playing a reversal? Am I playing a breakout? Or I'm playing with a trend? That's something that you have to do. And trading and breakouts can be similar, right? But ideally when you're playing a trend line, you want the price to go back to that trend and then you get in. You don't just chase or buy them at these highs. So again, reversals are easier to play. Trend lines are very easy to play when the trend actually holds all day. But you see, for example, yesterday everybody thought we were on a downtrend and the market flipped green, so you also have to be careful. And we're gonna go on trend lines on how to draw them too when we do the chart patterns because a lot of those chart patterns have trend lines as well. So for example, let's draw support and resistance for spike tomorrow. So as long as the market holds this range, we can use these levels for tomorrow. I go on my drawing tools, and I do here price levels. So this is what I'm gonna be looking tomorrow on SPY. First, I'm gonna use the 1 year and 1 day, and I'm gonna probably switch to the 10 days, 20 days and 1 hour. I'm probably gonna do that. That's why, for example, sometimes when I send you this type of text or message in the watch list, let me get this watch list and let's see how I got these levels. So I think a few weeks ago I was sending you guys those levels. Let me go back to them. Give me 1 second. Doing this, and I say, here are some levels, guys. By the way, can you guys still hear me? And is it working fine? Perfect. So for example, if I'm looking tomorrow, the trickiest part is that you have to, when you're doing these levels, you have to keep two things in mind. Am I gonna use this level tomorrow? I could easily draw a resistance here and, oh, I see a spy here, 431.86. Are we gonna see a spy at 431.86 tomorrow? Unlikely. I mean, it could happen, but most likely it won't happen. So what you want to do is you want to look at multiple parts where the price holds. So for example, here we have support back in March, and we have resistance in June. We have resistance in August, and then it kind of break and it went down. So this level could be good to draw. We're not gonna see 416 tomorrow. I mean, unlikely, but at least it's giving us a closer idea. Now this one looks good. Why? You remember we say a lot of the time all support becomes resistance, so keep that in mind. I also, because these prices, you see, for example, here, this is a good example. So like here, you see how it breaks and it went back down. I usually keep it in mind, but I don't trust that exact same level. So I just know that around that level, there's resistance. It could be 10 cents off, it could be 10 cents more, 10 cents less, or 15. So always give yourself some room for error, because again, this is, nobody's perfect, but you know, it looks good enough. We have support back in April, support back in August, resistance back in August again, and then it seems like in December it was holding. So 406.93, now it's more realistic to see 406.93 tomorrow than 416.34 or 431.86. Now we look at the downside. We have to look at support now. We have something to play with the upside. And I did forget to tell you guys. So you have to look at that, where the price, where are you drawing your support resistance? And ask yourself if likely you're gonna be using those levels on your trading that day. Another thing that you have to ask when you do your watch list overnight, don't do them too close to each other. So for example, if you see SPY here, so SPY today had resistance at 406, so tomorrow I'm gonna use 404.96 as resistance. Well, if the market, we have data coming tomorrow, let's say we get a good report and the market opens at about 406.96, then your level most likely are not going to be too helpful. You might be able to retest or use it as support, etc. But you always want to give yourself a few dollars on the price to get those levels going. And sometimes, you know, they break overnight. So what you have to do is you do the same, but you do it, like I do it every night, and I double check them every morning before I trade when the market's closed. So now we have to find support. So support is the bottom of the price. So I like this level here. It was support in May again. A little bit of a resistance back in June and July. Another support in September. So you notice it's something that happens often. Resistance in September again. A little off, but resistance in October. Resistance in December, and now it's acting as support. So a very good level to have here, 387.04. Are we gonna see a SPY at 387.4 tomorrow? Maybe not, right? It's up like a $18 gap. So we're gonna have to work with something closer now. I have this one here that looks closer, 391.55. Or today's level was 393.11. So we have 393.11 for today. 391.38. What? 391.38. So we can do 391.38 support. So we have a pretty cool range here, about $15, right? $15 is still a lot. You don't see $15 move intraday every day, right? So what do? We can get a closer time frame. Now we can work something that could help us better for tomorrow. We have the longer picture now, or the big picture. Now we can have a smaller picture. But I always like to start from plus to minus. This is something that it seems easy. So maybe for some of you guys it's easy. I don't know. I'm pretty sure some of you guys already know this and some of you don't. But right now I'm gonna go on the 10 days and 30 minutes chart. So now the lines are not that close from each other. And it looks a little messy, so it looks like a lot of candles. So I'm gonna do a little further. I'm gonna do on a 20 days and 1 hour chart. So I'm gonna look at SPY for the last month. So the problem here is that this is the first time SPY has been in this price for the last 20 days. So you're gonna have to do a resistance from today. That's gonna be your last price here. So you can do one at 405. You can do 405 plain. And again, at the same time, when I'm looking at all these resistance, I also have ES chart. I have QQQ. I have the book map where I see all the sells and buys. So it's not just this, but again, this is something where you can start. Like, I'm not gonna be tomorrow, oh, SPY's at 406.93. Like, this is it, it's gonna come back down. You have to see, okay, if I have a 406.93 resistance here and I see that in the book map there's a lot of sell orders at this level, then yes, but just something, because it hits you always have to not doubt yourself, but be kind of skeptical and always wait for confirmation. So for resistance, we're gonna have to do today's high. Now support. Support. So today, seems like 400 was a pretty strong support. So we definitely wanna do a 400. Yeah, so 400 level, it's good enough. If you see work as resistance before, it worked as support a few times here, then it worked as resistance here, it worked right as support again, and it's not too close. So now we have 404.92, 406.93 resistance, and we have 402 resistance. Another thing that we can do is we can get this resistance here and use it as a new support. So we're gonna use resistance at 403.24, which it was actually support as well today. So we can see that. So tomorrow we have multiple levels to watch. Again, we have to see how the market opens. So we're gonna have a range between 404.92 and 403.24 to watch. We're gonna have a further support at 402 and a further resistance at 406.93 on SPY only. Again, then I have to do it for ES, I have to do it for QQQ, I have to do it for NQ. Top of that, I have to look at VIX. We have to make sure that we know if there's any data that will come that could affect the market. We have to look at the book maps, see where the buyers and sellers are. And maybe next class when we do the patterns, because I only have 3 things to talk about next class. If we got time, I can show you guys the book map. Book map is a very helpful tool because you can, I'm gonna try to load it here, so let's give it a second. It takes a lot of space in your computers. You do need to have a computer that runs well. So bookmap is basically going to tell you where the buyers are and where the sellers are. And with that, you can also double check your support and resistance levels. So let's give it 30 seconds or 1 minute to see if it loads, and I'll show you a little bit of it. But yeah, bookmap is data that is there. Like, it doesn't lie. It's not like, it's real orders from real people or funds or whatever they come from, exchanges that are there, that are set at that price, and that they will trigger. So if you see orders of selling at ES at 40.73, most likely ES is going to drop a little bit because of those orders. How much is it going to drop? It all depends on the block of the orders. And I'm going to tell you how to read that. Seems like it's loading now. Okay, again, it could look a little confusing at first. Right now, there's no orders because the market's closed, so it doesn't have. But for example, here, when you saw all these walls here, at 470, they have a lot of orders. But this is better to do it when the market is actually open, because right now it's just having other data. But we will get through it too, because this is something that you guys should learn. Like, it's truly, truly very helpful. Okay, so I think we learned basics. Let me share the studies with you guys. Ignore this script. That one actually I'm gonna get it out of the way. The volume we share it with you guys. You can have the other volumes. Real momentum, TTM squeeze. This was a long time ago. I haven't used them in a long time, so these ones you can ignore. I'm not even gonna share them in the screen with you. They might be good, but I haven't been using it lately, so I'm just gonna share this with you. And that volume channel is pinned in our Discord, so you may have to go on our pin message and 2 or 3 pages down, but you will eventually find it. So those are the studies right now that I got. The standard deviations, they measure small chart. So I'm gonna share with you also my screen. This is what I look all day, every day. On this screen, on top of that, I have another screen where I look at 4 other charts, which could be any stock, could be Apple, Nvidia, etc. And I have another screen where I look at the bookmap and float. So again, that's just me. So for example, why did we play puts today on QQQ? Let's go over that place. You guys want to do that? And then we open questions. It's up to you guys. I have a little more than an hour, a little more than 20 minutes. Okay, so QQQ, right? We play puts. At that point, we thought it was at the very top. So let me look at the QQQ. We play QQQ puts at what time? 7:30 Eastern time. 7:30 Eastern time. Oh, by the way, if you grab on Thinkorswim, if you see like you cannot fit your charts, you can always right click, auto zoom. You can get them closer to you, and you can do this up or down, and you get a better view. So at 7:28, we had a big run on SPX, right? This is the open. This is in SPX, no ES. 6:30. By the way, ES is not for QQQ, NQ is for QQQ, but they move very alike. So if I see SPY same, I go for QQQ. If I see, for example, tech is moving different than SPY and they're not matching the way I like, I play SPY instead of QQQ. So that's why some days you will see that I'm alerting SPY, and some days you'll see that I alert QQQ. That's why. So at that time, this is a 15-minute chart on ES, my bottom left. 7:30. So we went up, we went back down. You guys remember how we talk about closing the levels? We didn't close above 40.55, and there was a lot of sales in the book map at that level. Again, we didn't close here, and I start seeing a reversal. So I decided to go puts based on this level. Eventually it worked. However, look at what happened after. He went back up, retest, stay in this level. These are 15 minutes charts, so this is about an hour and 30 minutes that it stayed here, and it eventually broke. It closed above, it held a support, and it went up. But our play was here. And this is a 200 EMA. We went through this too. It bounced right at the 200 EMA on the 15-minute chart. Now, where was SPY at that moment? Similar. So SPY was at the same time at 728, 725. We entered at 728. SPY was at 403 resistance. It couldn't break it. It went down. So I knew this resistance was a very big level. Eventually, bounce of support. This is the support that we draw today. Retest resistance. This is the exact same level where we were getting in. Eventually it broke it and it went back up. So yes, resistance can be break. They can be played if you know how to play the breakout. However, what would have happened to you or to some people, you see, oh, SPY is breaking resistance. I get in about 403.47. Oh, he went to 403.52. Almost a $1. A $1 drop. So for contracts that expire the same day, that's like a 70-60% loss. For contracts that expire the next day, that's like a 40% loss. So a lot of people will get stopped. And eventually it comes back up. By the way, if you enter here and it comes down here, your break-even price is going to be somewhere here. So it's not as great either way. In these cases, it's better to play the trend line. So instead of playing the breakout, you see, okay, it looks strong. Try to wait, be patient, and see if it comes back down, if we can get the upside move. So for QQQ, it was a resistance at 292. Right at this level, I see at the same time, I see that ES is not breaking. SPY is not breaking. QQQ is not breaking. There's a solid amount of orders in the bookmap at 40.55. I see bigs as well. Bigs trying to reverse here at 19, right at 19. It's trying to reverse. So obviously, if bigs goes up, market should come down for most of the times, not all the time. So yeah, that's basically what I did. What I decided to enter. I play a reversal. I play of 40.55 on ES, 403.24 on SPY, and 291.99 resistance on QQQ. So I got those three levels. I look at the bookmap. I look at the contracts and which contract I thought it was the worst or the best. I thought it was tomorrow expiration. They don't move as fast, so sometimes you guys can have a better chance to get in with me. And I saw bigs forming up. So that was basically what I saw at that point. I saw sell could come, market can keep going up. Let's try to play the way down. It worked this time. It doesn't work all the time. So at this point, let's say we will have done the same play here. Again, we say, hey, it's at the same level. We get back in here. When you see this candle 15-minute or 5-minute closing above resistance and your inputs, you should get out. Yes, it absolutely can come back down and you could take a loss when you could have waited and take profits, but the right way to do it is to recognize that you were wrong, because even if it comes back profitable, you still made a bad trade. You just got lucky. That's pretty much what's happening. But yeah, that's pretty much what happened. And yeah, so support, resistance, EMAs, standard deviation, pivots. What type of play are you playing? Are you playing a reversal? Are you playing a breakout? Are you playing with a trend line? How to use different time frames for scalps or swings? That's pretty much what we went through today. Next class is gonna be Kian. It's gonna be flow. But next class on chart, I wanna go with this more because I want you guys to practice. Again, I mean, I've been doing this since 2008, and this is the first thing I learned. So it sometimes it could take a lot of work because you're not comfortable drawing in different time frames, and you find yourself with a chart full of useless lines. So just keep practicing. I'm always here for you guys. If you guys wanna show me a little bit. The good thing is that once you get this, it's super easy. Like you do it, what it used to take you 30 minutes, you do it in 2 minutes. Like that's it. I do it every night and every morning, so it's not, and it doesn't take me that much time. Okay, well, tick is no. Don't use tick for confirmation. Tick is to basically know. So tick is more when you're already in the position. So if you're in puts and you see tick coming up, you're like, oh man, like it's going against me. If you're in puts and you see ticks coming down, and SPY, let's say you're in the SPY puts, right? And SPY is like moving down a little bit, and then you see a big drop on tick, you're gonna be like, this thing is gonna keep dropping. It should keep dropping, so I'm gonna get ready to sell. Like that's pretty much what I like tick for. I don't use tick for confirmation because tick can be at 1,000, and within 1 second it could be at 0. Okay. Yeah. Let's do some questions. You guys feel free to talk if you don't want to talk or you prefer to type in the chat. Let's do it. I do have 10 minutes left though, so try to make questions that are related to this because other questions can always after hours. But if you want to talk about this right now, it's preferable. I see some people are typing, so. For those, let's. For that alpha swing, I'm gonna show you something that I did. Okay. You mean that's called OCO order. It allows you to set a limit order and a stop at the same time. So you have to look into those OCOs. So on thinkorswim, let's say you have a SPY here. Hold on, a SPY. So for SPY, let's say it's hard to do it when the market's closed, and I think I did a presentation on it too. I can share it with you. So basically, what you do, let's say you already have this 403 SPY and you want to sell. You obviously have to do sell. What you have to do is on advanced order here at the bottom, you do OCO. So an OCO, you can set a limit, sell. Let's say you are at 124, you can set a limit sell at 1.4. And then you have your limit sell. Then you have a create a duplicate order. It's gonna allow you to do another sell of how many contracts. Always make sure you look at the amount of contracts that you have in the selling. So now you do a stop limit or stop, whatever you prefer. And you can do a stop at 115, for example, 113. So for example, let's say you want to sell 3 contracts. You have 5, right? You sell 3 and you want to set a stop for 2. You'll do it like this. So you're selling 3 contracts at 140 limit, and you have a stop loss for 2 contracts at 110. So that's how it is. I think there's in the basics channels, I think that's, we talk about that. I can what candles give you confirmation of what rejection and what is breaking through either EMA or support resistance? Definitely not the 1 minute. You can do 5 minutes or 15 minutes on day trades, scalps. Maybe 5 minutes is good enough sometimes. The 15 minutes you can be already late. If you want to swing, you buy the daily candle to close above. So at that time, you either get early or you have to wait until the next day. Did you get that? Let me think. I'm gonna show you alpha. There's a presentation that I did from that, and I think it's on our basics channel. I'm not looking at your questions right now. Let me find this for this guy. There it is. Okay, perfect. I found this for you, brother. So yeah, you can use this as your OCO. Yeah, and if you guys want to know this, this is especially for the people that work. When you play flow plays, like announcers, you play them early in stocks. You have when you play. It depends. If I like the flow and the chart, I get in. If I don't like it, I can get in 20 trades at the same time. So it just depends on what I like. Like when I play QQQ or SPY, it's not on flow at all. But yeah, like let's try to keep the questions for what we talk right now because we can use it. We can talk about other stuff tonight and through the day. But right now, I would appreciate to get this clear. But you should always match the flow with your charts regardless. So whatever the flow is like a scanner. You know, you use scanners, but you don't just buy. Like you should do your own DD, what we call. So you do. You want to definitely look at the charts the same way you would do it for any other things. Like if the chart and the flow matches, go for it. Like even if you lose, it's not your fault. Set a stop loss and go. But you know, sometimes flow and chart matches. There's not much more you can. Oh, that's the pivot point. I'm gonna send you a pivot point here. Here's Excel. So you guys can calculate this. There's a lot of studies on pivots that you can get, or you can just do them yourself. It's up to you. There's scripts on Thinkorswim. There's scripts on TradingView, and they're free. Or you can do them on your own. There's a formula there. All you gotta do is put high, low, and close. That, hold on, that's an EMA, not a DMA. My Discord is acting off. Yes, okay, so here's a trick for Intraday charts, there's only, from my experience, one EMA that I like, and it's a 200. For 1 year, long time frames, I do like the A, the 21, and the 50. I like the cross. So most bullish scenario, it's A, 21, 50, and 200. So the A is, then it follows the 21 and the 50 and the 200. Most bearish scenario, the 200 is above. Let me show you an example. Actually, my stream, I think I'm still streaming. Yeah, I'm still streaming. So, example here, this is a 1 year chart. Let's look at BBY, right? Something that's been getting destroyed. So BBY, not even. Well, so the market went up a little bit, but find something that what's a stock that has been getting clapped? Well, the pivot point doesn't. The pivot point, again, if you're doing it for the day, you have to look at the day high, the day close, and the day high, the day low, and day close. If you're doing for swing trades, you want to do it with the weekly levels. So, for example, SPY right now. SPY right now has been a lot of talk. I'm gonna erase all my problems that we did. No, actually, I don't want to do them. So SPY right now is above this red line that is the 200 EMA. This is the most bearish scenario when you have the 200 and then the 21, the 50, and the 8. Once they start crossing, so for example, right now, the 8 EMA, which is the blue line, is crossing the 200 EMA on the daily chart. And the stock is currently trading above the 200. This has happened before. So when it's based on technicals, this is a long signal. This is a signal that you should be buying. However, remember, technicals are not tolerant to inflation, to interest rate decisions. So what can happen? You can have the best setup and you can go long because your technicals are telling you that. But tomorrow we can have, or not tomorrow, whenever on January 1st, on February 1st, we can have the Federal Reserve saying, hey, we're going to keep rates at 50 BPS increase. Or you can have inflation coming at 6.6, 2 points above the expectation, and the market's on attack. So your support, your resistance, your EMAs, your candlesticks, they're not going to be very helpful for that. You cannot control those events, and your charts are not going to, they're not going to, if you have a bad inflation report, the SPY is not going to stop dropping at 400 because it's going to drop as much as the sell-off is going to be. Yes, eventually you will be able to reset and redo your levels, but that's part of the game. So, I mean, technicals are good. So there's something that is called weak market efficiency for those guys that took finance classes or investment classes. So weak market efficiency is basically technical analysis. So it's charts. Just because it says weak doesn't mean that it's actually weak. Just saying the amount of data that is available for you because you only have past data. That's the main thing about charts. You don't have anything that you can seek. You don't have anything present. It's all based in the past. Then you have semi-strong market efficiency, which is basically valuations using fundamentals because you're using present information to make future. Know how to do valuations, you can do that. And they usually work on a longer time frame when technicals work on a shorter time frame. Like just because some company is going bankrupt or some company has poor financials, you don't short on 2 weeks. You you could short, but you want to short for a long time, like 1 year, 6 months, something like that. Or just because the SPY right now is above the 200 EMA, doesn't mean that you want to be long for a whole year. You want to be long for a short term. And there's the strong market efficiency, which is insider information. Only executive of the companies have that information and trade on that. So basically, you can predict the future of a stock when you have a strong market efficiency. No, don't even worry about the 90. It's not for me. I mean, try it out, and you try it out and see if it works for me. Daily, like 1 year chart, 1 day chart. I like them all. The 8, the 21, and the 50, 200. Intraday, I stick with the 200. I tend to ignore all the other ones. I do like PWAP more than the ADMA. Yes, the volume. Well, I could share this one with you guys if the one that you find here is not the same. Can you send me a screenshot of the one that the volume indicator? I have 3 more minutes, so I can get to a few more questions. Yeah, I mean, we can Google that. It's just a formula. I think one, like I know the so hold on, give me. And again, none is better than the other one. So it's just the way they are, the data they take. So here, I'm gonna DM you. This is a good article where you can find more about the DMA. I'm gonna send it to you. I think Eva likes to use the DMA, so try them both. My favorite chart pattern, to be honest, none. To be honest, I just like price action. Like I basically, because I like a lot of support and resistance, I look at a lot of triple top, double bottoms, triple bottoms, etc. Flags are good, trend lines are good, but oh yeah, that's a good idea, but a little too late. Well, next time. All right. So, well, I think I'm gonna call it here, guys. Hopefully, this was helpful and you could learn a little bit. Again, you're not going to be an expert right now. There's a long way. And in the next class, we're gonna go over patterns, supply and demand, trend lines, etc. But this is just something that you can start with. Just basically giving you the same way I start. That's how I start. I start doing support and resistance. I remember telling Kian, look what I found out. 4 years, 5 years. And we started drawing lines like that. At first, it was super messy, but then they got better. Okay. Can you guys still hear me though? Well, I'll see you guys tomorrow. Hey, remember, tomorrow is Friday. CRDT contracts, just be careful. Like, don't ruin your week on a stupid trade. Like, we had a good week, so there's no need to, like, we gotta trade smart tomorrow. You can still trade. Doesn't mean you have to. If you wanna trade, if you wanna really do it, go for it. But just be careful. That's the main thing you have to know. It's like you have no time in your favor, and those contracts are likely to expire worthless. Most of the contracts you're gonna get. All right. This is it for the day. I'll see you guys tomorrow.